Yo, what's going on everyone? Lalit here. 2020 was one hell of a year, and it's 2021 now and Bitcoin is pumping again. I want to talk about Bitcoin and cryptocurrency overall and talk about how it's going to play a part in my investing strategy for 2021. But it's the first video of the year, so Happy New Year. Can't look like this. I'm going to go get ready. I want to see you on the other side. Alright, I'm back. So how we're going to do this is basically cover how earned income funnels into the investment portfolio as a whole. As I go over certain strategies I implement, there'll be cards that show up on screen like this, where you can get deeper information and that step-by-step on how certain ways make money specifically. Starting us off at step number 1, you got earned income. You can check out my 7 sources of income video for more details, but this is step number 1 because we need something to funnel through to actually get into the investment portfolio as a whole. We'll be focusing on how the income is actually funneled through into the investment portfolio versus talking about how it's made before the fact. This earned income goes into 2 places primarily. It's going to be the stock market as well as the cryptocurrency market. The funds that go into these accounts primarily sits as cash until we have ample buying opportunities to get into these positions, whether it's a stock market or cryptocurrency. As we continue, I'll delve deeper into the strategies that I use for both the stock market as well as the cryptocurrency market to grow the portfolio accordingly. From here, I primarily trade both in the stock market as well as the cryptocurrency market, both to grow the portfolio as well as use those same funds to invest further into the same positions or other positions, both in their individual markets. Although I trade heavily, I do hold positions, and to get into these positions, I dollar cost average accordingly. From a shares perspective in the stock market, the goal is usually 100 shares, and that's mainly because of the next step in how the money funnels into the investment portfolio. This is where selling calls and selling puts, aka selling options, can create passive income both in the short term, aka weekly income, as well as monthly income, and other ways depending on how you structure it overall. I primarily use this technique for high growth stocks, mainly because their volatility is higher, and based on their volatility and how options work as a whole, you actually have more income than not. Further, with high growth stocks, just the way it goes, you gotta wait until a certain point to actually exit to keep those gains and to actually lock in those profits. And so this way of selling calls and selling puts, you're actually able to get back some of that capital and decrease your average cost for the position as a whole. Coming to cryptocurrency and options, there are binary options that exist for cryptocurrency, but it's outside of the US, and in general, from a crypto hodling standpoint, for me personally, that's one thing that even though there's high growth and even though you can get the same capital back, it's at that point where it can run up so fast, so quick, that it's one of those situations where even if I could get premium on cryptocurrency, I may do it, but I also may not. But again, it depends on the coin, depends on certain factors, and it's not something I've considered yet or thought through properly, mainly because the option isn't really available to me at this time. So to keep it simple, I don't do options with cryptocurrency at this time. The final step of this funnel is using all of the active income earned throughout this funnel and in general to create passive income for the future. Whether you call it a retirement portfolio or a long-term passive income fund portfolio, whichever way you look at it, essentially this part is a part that after I choose certain stocks or certain cryptocurrency, which we'll get to, basically this is going to be passive where it doesn't really include my active involvement. From the stock market perspective, it's going to be DGI, aka dividend growth investing, and it's a similar concept in the cryptocurrency world known as staking rewards. So check out this video for dividends versus staking rewards, aka the stock market versus cryptocurrency. From a withdrawal perspective, I'm not using these funds now and don't plan to, and it's a long-term outlook, aka for the stock market, I use DRIP, aka dividend reinvestment plan, and for the cryptocurrency markets, it's pretty much the same, aka you're going to get more of the same cryptocurrency, and for the stock market, you're going to get the same stocks, you're going to get it as cash, and that same cash is buying those same securities, and within the cryptocurrency world, you're just getting more of the same cryptocurrency. Cryptocurrency-wise, for Bitcoin, when you take out staking rewards and the potential, and without getting too detailed, overall for Bitcoin, there is a site I've been using for almost 10 years now, and it gives you 4.08% in interest every single year for the BTC that you keep in those accounts. There's some other angles to it, like some gambling options and otherwise, which I don't take advantage of those type of situations. And so if you just park your BTC, you do get paid handsomely. And over the years, as BTC pumps, that percentage, aka the yield on cost, has been way more than 4%. I'm not getting too detailed into this angle, but if you're interested, I'm going to leave some information in the description. There's a referral link for it, but there are some gambling features, so just be wise. But I'm going to leave it, so good luck with that, and ask any questions about it in the comments below. Happy to answer. Overall, what are my thoughts on Bitcoin and cryptocurrency as a whole for someone's investment portfolio? It's basically going to be that if you dollar cost average in, you're basically getting a decent price in the long term. And apart from that price, no matter how high Bitcoin goes up in the short term or cryptocurrency in general, you're going to be invested versus not invested. And if you're just waiting for the crash, waiting for a dip, you can buy in the dips, but just buy consistently, basically. And from a trust perspective, or is there going to be adoption in the future, or these type of elements, I think in the end of the day, just from a mathematical perspective, the way cryptocurrency cryptocurrency has been pumping, whether now or whether from years ago and in the future. Let's see. The point is, 1% of your portfolio, just 1%, if that even goes up 10x, whenever it does, it's going to give you huge returns. And on the downside, you only have that 1% to go down and 99% of your overall portfolio to keep going as you planned initially. So thanks so much if you came to the end. You're a real one. I'm in India still, so I'm recording under certain production conditions. So hopefully this is okay, and appreciate it. Subscribe, like, you know the spiel. But with that, we'll see you soon. Enough.